Soleil, and this is episode 598 of the Orange Pill Investor. I can't think of more wise and insightful words than all I want to do is be more like me and be less like you. Got to be a lesson in there somewhere. But what I want to talk about today, since the market is moving, is how I personally deal with covered calls getting wrecked. I'm prepared I'm prepared for this when I open the contract. So I generally don't roll until much closer to expiration date unless there's one specific reason why I would roll early, and that is if there is no extrinsic value left in that option, which could be the case specifically on some of the ASST calls that I have on Strive. There might not be any juice left to squeeze out of those. And so that's going to be the same thing, whether the price of the stock is going up or down. For covered calls, if the price of the stock is going down, then there just might not be much extrinsic value left because it's trending towards zero. But in the case of when the price goes up, once it gets to like 90 delta plus, if there's like a nickel of extrinsic value and $1-2 of intrinsic value, then in that case, holding it over time, I'm only going to be able to collect that nickel. So let's see what that looks like. I don't think I have, I don't have any of those positions in the main account. So probably will, well, this is kind of a good example. I don't know, I haven't looked at this one, so I don't know which way this is going to go. Let's minimize that. But the process is the same. So once this goes in the money, instead of it all being extrinsic value, part of it is intrinsic and part of it is extrinsic. To calculate how much of this is extrinsic, I'm going to take the strike of the call, subtract it from the price, and so that's going to be, let's just say that that's $13, right? We'll say that this is $365.50, and so it's going to be $13, which then I take that and subtract it from the extrinsic. There's only 30 cents left of extrinsic value. The rest of it is intrinsic. And this is going to expire tomorrow. So if I hold this, I can collect that last 32 cents. I can squeeze that last little bit of juice out of here. And that really doesn't make any sense. However, it's going to cost me $1,300 to roll this. And so what you can do if you don't want to exit this position and just let your shares get called away is you can roll out, hopefully for a credit. And I don't know if I love that or not, but let's close this. But then also, if I wanted to try to roll this all the way out to like 45 days, yeah, I could do that as well. And then just kind of kick the can down the road. What's the price? 365. I can roll anywhere between the at the money price and around 390 in order to get a small credit and not actually have to roll for a debit. I don't hate this. I don't exactly love it either. Because what I had been trying to do was just hammer the weeklies to generate premium. However, I am like so close to my goal that maybe I don't worry about it anymore. if this is the only position you have and you don't want these shares to get called away, this is pretty much your only option, is trying to roll out for a credit and try to just play the whole roll until you're right game, until this kind of, until Tesla comes back down in price a little bit. Now, these are worth 70. Let's see if what are these worth if I close them? They're not worth shit. So that's not going to be helpful. What are these worth? Yeah, those aren't worth much either. This one is much less urgent. It's still out of the money, so all of this is extrinsic value. So this one I can ignore for sure. But I wasn't really dollar cost averaging into these positions to the point where they're actually valuable now. Like I could get $460 for these if I sell them. But, oh, I'm sorry, that's the trade price. I can only get like $100 for these, I think. So the only way that I can keep this position is if I use my other positions to generate some cash to pay for them. So maybe rolling some of these up for a credit, that's possible. So maybe I should come back to this and see where I'm at. If I roll, yeah, if I roll to Friday, I can only roll like one strike for a credit, so that's not really helpful either. In general, when I'm trading like mining stocks or just cheap stocks, I just let them get called away and don't really worry about it. But I'm being pretty protective with my Tesla shares. Number one, well, this would be tax loss harvesting if I let them get called away here. So I don't really have to worry about long-term capital gains taxes or anything on these. And I think it's actually my IRA Tesla shares that I've had the longest. So maybe these shares don't really matter, but you have to hold a certain size position if you want to be able to suggest questions from shareholder. So for that reason and nothing to do with the trading itself is why I'm trying to hold on to my Tesla shares. I want to be able to get those shareholder privileges, and you have to have held these for at least a year and be worth a certain value. There's like 3 different tiers for that. So the only way to find, well, actually, let me think about this. So if there's 40 cents of extrinsic value here, if I prorate that over a 5-day week, that's $200. That's actually about 0.5% for the week. So even this last 40 cents is not actually terrible. I could wait till tomorrow to deal with this, and as long as I deal with it in the morning, I probably wouldn't get exercised. But with only 1 day TE left, this is kind of playing with fire at a 90 delta. Someone could exercise on this, but that generally doesn't happen before like noon on expiration day. But if I'm nervous about it, which I do have, a rational attachment to these shares, it makes sense for me to roll either to a higher strike so that they don't get called away, but not from panic of like, oh, I'm afraid this is going to go to 400. Like, that's not the reason to roll this, in my opinion. There should be another reason other than the fear of the price moving. All right, so let's see if I can capture some premium with these other positions. But I'm actually getting wrecked on all of these as well. But there's no reason for me to like panic at this point. But I should do the same calculation. 130 from 138 is 827 to 828, which means there's about $1 of extrinsic value left for half a trading week. That's not terrible. So I'll do nothing here. None of my long calls have really pumped back enough to where they're profitable. But if I had to, I could peel those off to pay for this. This one, yeah, no, nothing to do there. Extrinsic value is increasing, so nothing to do here. Now here's where it gets interesting. I'm like so close until the Roll Until You're Right game is satisfied. But since it's, $1,000 has decayed from this position, this could be an opportunity to roll this out 2 weeks and then capture some more premium that would pay for my Tesla roll. But I also wouldn't mind taking off a couple of these positions, especially this one. There's not a whole lot left there, even though it's only been on for 4 days. And then some cipher positions. So every one of these that I close would cost me about 40 cents. So if I roll half of them and then close the other half, that's kind of a break even. So I'd be capturing some premium, but also removing some of my exposure to this position. So let me just start there. Let's close at least 3 of them. Ooh, let me share without volume. Tommy DOU. Nithya, would you be comfortable with 3 million in stretch at this point and just chilling? 3 million in stretch. What's that gonna give me? 300 grand? I mean, probably if somebody just wanted to ride off into the sunset. STR, but I'm such an upside junkie. I couldn't bring myself to do it. From a safety perspective, if that's 100% of the portfolio, that's still kind of scary. As much as I believe in Bitcoin and strategies execution and the product, it's still less than a year old, isn't it? Like that's pretty that's conviction. I don't know. I don't know about that. What's up, Sandeep? Out of curiosity, I have had an order to buy 100 shares of Stretch for $100 for an hour, just sitting there and it won't fill. Yeah, I've got like 5 shares I think I'm trying to buy, and I was wondering if they were going to fill today. I imagine not, because everybody's trying to buy. Because tomorrow is actually, I believe it's ex-dividend day and record day. So if you buy today, you'll be on record as owning them tomorrow, which means you will get the dividend. So everybody's trying to put in their bids today. I'm sure, I don't know if they can execute on like a half a penny, but they're probably slamming the ATM at 100 and a penny, or like 100 and half a penny, if that's possible. All right, so if I buy 3 of these back, it's going to cost me $100, $114. And then if I take the other 4, and actually I can roll. Let's see, the liquidity is not terrible here. So I could roll up. Let's see what I can do at 45 DTE. The liquidity is not great, but it's also not the worst I've ever seen. But if I roll to the exact same strike, that's not a whole lot. Let's roll to around the expected move. Let's see, that's 50 cents wide. This is about 40 cents wide. So let's just roll to 15. And I'm gonna try to get a little bit more of a credit, but I don't think that's gonna fill. Yep. So I paid $100 to close 3 positions, and then I should get paid more than that to roll these up. but I will have captured some profit and then also reduced my exposure to Cypher. So if the price does crash, that will give me some extra option buying power to add positions if Cypher crashes to $15 a share or something. So I like that. That gets me to 400 in margin. Let's see, these are my oldest positions. So let's roll these out to 45 DTE. That's a very small credit. I'm not sure that's worth my time. And the bid-ask spreads are nasty here. So I don't like that. But it's going to take another 3 weeks for this position. I'm sure there's probably pretty good liquidity here. Yeah, because this is one of the monthlies. God, I hate waiting that long for these to be ready. This is May 15th. All right, the bid-ask spread is only 30 cents wide here. This expiration date, so I can roll out 1 week. That's not going to be worth my time either. It sucks because the week that I want to roll to has the worst bid-ask spread. Now I'm sure I'll get a fill here. Let me just check it again. The buck 67. It just seems like a waste of my time to roll 2 weeks. Well, hold on. Let's check this. Let's check what my expectations should be. This is in the money. It's $7 in the money. So there's $7.45 left in extrinsic value. Yeah, so I'd only be rolling for like 20% of this credit. Yeah, that doesn't make sense to me. What about this one? No, this is only 4 days old. Let's see. If I roll up closer to the expected move, $1.50 credit, that's not terrible. And the bid-ask spread also isn't terrible. Let's do that. Let's see, ungroup. Let's put my cash secured puts back together. $2.90. I'm so close. Oh, but I got to pay for this. uh, all right. Let's roll it. Whoops. Roll expirations. No, they're not going to let me roll to the one that I want. All right, I'm just gonna straight up roll at the money. Small credit here, but this is gonna be enough to get the job done and avoid exercise. Getting exercised for now. And boom, no margin use, even after taking the 5 grand out to pay bills. All right, so Tesla, done, diddy done. Strategy. Should I buy 5 shares of Stretch? If I can. 500 bucks. Let's try to buy it. 5 shares, and I'm gonna put in 100 bucks. Limit for the day, because if they don't get filled today, then I don't want them. All right, we'll just let that cook. If it fills, it fills. If it don't, it don't. I mean, technically, I should just pay the extra penny because it's going to pay almost 1%, which is $1 per share. So I'm going to make $5. I should probably just pay the 5 pennies and get paid the $5. But at the same time, if this drops below 99 tomorrow, then I can't exit and make any money. But anyway, I don't need the 5 shares. If it doesn't fill, it doesn't fill. It's fine. But $5 is $5. All right. So the IRA, how much cash do I got? I have maintenance. I have $35 in cash. So can I even close these? Yes, I can close these. All right. So I've been selling cash secured puts. The price went up. There's nothing left really to collect. 3.5 trading days to collect 4 cents is like a penny a day. So these need to be closed. Congratulate myself on a winning trade. But that's going to give me, 2 grand to play with now. So we'll see how much I end up with. Now I have no ASST in the IRA. I'm tempted to just leave it that way because I just have too many positions. Now I could take some of these off and put Strive back on. Maybe that's what I'll end up doing. What do I have in this account? I got Cypher, Tesla, Stretch, and Strategy. I don't really need Cypher. I don't need any of this position, except it's just, well, I got into Cypher in the margin account because the margin efficiency was very good. But the margin efficiency for Cypher doesn't matter in a cash account. So maybe I'll just exit this entire position as well. There's not a lot of extrinsic value left here. I've captured 65 cents of the 78 in 4 trading days, and there's 3 days left. So it's more than 50% of the value I've captured in 50% of the time. So these are ready to come off. 2/3 of this has come off. And there's, 30 days left on this. I'm just going to close. I think I'm going to close all of these Cypher positions, and I'll probably just recalibrate what I want to do with Strive. And basically just I'm paring down my position so that I just have less to deal with. I've already got Cypher in my regular accounts. So let's just close all these bad boys. Full. Oh, this is actually going to cost me a debit. Why? Hold up. Oh, because I collected the premium, but now I'm paying a debit to... Yeah, I got paid 78, I'm paying 13. I got paid $1.56, I'm paying 40. Yeah, so I've got paid up front, but now I'm just capturing. I'm paying a debit to exit these positions to get all my collateral back. All right, maintenance excess is 10 grand. That's interesting. That's kind of a lot relative. How many poor man's covered calls do I have? Maybe that's why. Are any of these profitable? This one may be. It's down 700 bucks on the long call, but I've been capturing premium the whole time. These are still a far cry from profiting, but they're sort of in the ballpark. They still have potential. But this is not ready to roll. So I could take the 10 grand and I could add another poor man's covered call. But I already have 12 grand. We've got like 18 grand in poor man's covered calls here already, compared to 28 grand worth of shares. So that's a pretty skewed ratio. That's pretty heavy on poor man's covered calls. So probably doesn't make sense to add any more poor man's covered calls on strategy in this account. It's a little bit too irresponsibly long. And 10 grand isn't enough to add a PMCC for Tesla. I'd need about 18 grand for that. And it's not enough to buy another 100 shares. I don't think I want to get 10 grand worth of Strive. Selling at the money cash secured puts would be about 3% returns for 1 week. That's not terrible. In fact, it's pretty good. Eight. Nine. Nope. All right, maintenance excess of 900 bucks. Nine shares a stretch. And I'm just going to smash the bid or smash the ask. Done. Josh Penny says, I'm fairly bearish on most of this year for Bitcoin and strategy, thinking of buying some at the money puts around 150 a share price to end out the year. What is your base case for 2026? Yeah, I try not to make predictions in that way, and I hate buying puts because I hate buying insurance. So I'm probably the worst person to ask. In general, as an option seller, I'm truly not making any price predictions at all. I'm just saying, um, based on the kind of insane premiums that people are willing to pay to buy these calls and puts, I'd rather just sell them anywhere from 7 DTE, actually anywhere from like 1 to 3 DTE all the way up to 45, and just let degens make short-term bets. However, to answer the question, if I had to make a call, what I would say is there are several catalysts that we could get towards the end of the year. I think the main one for Bitcoin is going to be the resolution of the spam war. So the user activated soft fork will activate in, I believe, late September. And we will know whether you are for or against spam, or whether you are for or against knots in BIP 110, or, whichever side you're on, doesn't really matter. The results will be known somewhere in September, October. And so we're going to know if Bitcoin is a spam chain or not. And the network, networks like security, like they like to just know, right? They like certainty. That's the word I was looking for. And so I think Bitcoin probably does have a late year push once this gets resolved, because the user activated soft fork will either be successful or it will fail. If it is successful, the spammers have an opportunity to try to create a user rejected soft fork. I'm guessing that will fail. And then if that fails, the last ditch attempt that spammers would have at that point would be to hard fork it and create a new version of Bitcoin, similar to what the Bcashers and the BSVers did back in the block size war. So I'm thinking that we get certainty in October, and we would get some kind of pump from that resolution. Whether it's the resolution that I want or whether you want, probably doesn't matter. Once we have a result, I think the price can move from there. And of course, there's midterms. They're going to want to pump it before then. We could be knee deep in a ground invasion, and we're just printing like a motherfucker to pay for the bombs and the bullet sponges to go over there and die for our greatest enemy, Israel, if that wasn't clear. So that'll be fun. So yeah, lots of catalysts for the end of the year. So if I had to go out on a limb and make a call, even though the option seller's whole philosophy is really not about making calls, it's just reacting to the implied vol, and saying, okay, does it make sense to sell a call and collect this premium compared to the collateral that I have to put up? If the answer is yes, you sell it. If not, you don't. I can't I can't think of any reason that I would buy a put on Bitcoin or Strategy. I would have to really have some kind of inside information that the shit's gonna go, hit the fan for me to buy puts. I mean, I guess if I had hundreds of millions of dollars and just had to preserve that capital, maybe I would buy some puts just to make sure like it would be worth paying the insurance. But for me, I'm still looking at growth, and for my personal portfolio, I can't justify paying premium hoping that Bitcoin that's going up forever might go down. That I can't bring myself to do that. And then if I think Bitcoin's going up forever and Strategy's a leveraged bet on Bitcoin, I would really have to have some insider information that Saylor was going to get fired or something, and there was going to be some crash in the price that would make me buy puts. Actually, the only other time I've actually bought puts was approaching the earnings call. The platform changed my margin requirements on strategy. And so I ended up with a margin call. And all I had to do was buy, where is it? All I had to do was buy some puts. Let's see, I think they were pretty cheap too. Like I just bought some. Let's just do the 125s. No, not. What did I just click? I meant to click buy. Here we go. So when I was had a margin call based on concentration risk for strategy, because like 90-95% of my portfolio was in strategy. I was only paying a small fee here, but my buying power effect was actually increased by like something ridiculous, 50 grand or 100 grand or something. I think I bought like 10 of these things. Let me just look and see. I don't know if it'll do it because I'm not in that same position anymore. Yeah. So you can see the similar thing. So in that other account, I didn't have a huge strategy position, but in my main account, I have, half of the portfolio is in strategy. So I could actually buy a put and get an increase in my option buying power because it's de-risking this portfolio. So like that would be the only reason that I would do this. And as soon as earnings was over and they changed the algorithm back, I sold them right back again. I didn't keep, it wasn't like I kept this position on for a year. It was literally just like a 2 or 3 day position waiting for earnings. So there are weird scenarios where I would consider buying puts, even though I'm like mega bull on the stock. But just in general, if I'm insanely bullish on something, it would have to be in a very, very extreme justification for me personally to buy puts. So I think we could get Bitcoin to pump from here, maybe like October, no, up October, up November, close out December strong. That would be nice. And then, maybe we get the super cycle that we thought we were gonna get, and maybe we pump into 2027 at least. That would be nice. But yeah, I don't, if I had to guess, maybe we hit 100, 125 in Bitcoin by the end of the year on that pump. Unfortunately, because of the dilution, strategy would probably not go above 300, 350 until Bitcoin hits 150 or 200. That would probably what it would take to get strategy over all-time highs again. But sell in May and go away could come true again this year. So your puts could print at some point, but buying puts is it's kind of an advanced strategy. I mean, some people do it as a matter of course just to protect their long positions, but like actively betting that the price will go down is a pretty advanced position. The hedge funds do it, but they can always get the financial media to run an article to tank the stock. Like if I buy a put, I can't get collusion and coordination in the market to make sure that my position prints. So it's not something that I almost ever do. All right, Sandeep, 10 million volume in STRC already. Should get to 15 mil at least. What does that work out to billions or hundreds of millions? Might end up with it. Well, I was going to say we might end up with a record week, but if everybody dumps their shares tomorrow, they might not be able to ATM the rest of the week. Let's see. Assuming that strategy is the only seller today, we should get at least 1.5 billion and SPY back to all-time highs with a nice big gap in the chart. That has to be a magnet. Okay. Yeah, SPY is something like to keep kind of in the corner of your eye just to see what the market is doing and like is the whole market dragging Bitcoin up or, dragging strategy up. That can I don't necessarily know that I trade around SPY, but keeping it keeping it in your peripheral vision, it's probably not a bad thing. All right, plenty of extrinsic value. This hasn't pumped enough in the last 4 days for me to roll this. Strive. These are ready to roll. So I don't know if I have. Yep, I've got 900 maintenance excess. So I can actually roll these. So let's roll the strikes up to. I'm just going to roll them at the money and collect another over 3% of the underlying price. Half a trading week. Works for me. Now, I could sell this $20 call and make 20%, almost 30%. If I had to, I guess I would. $480. What would that get me? Would that get me anything interesting? All right, I got 53 shares of stretch. I won't be dumping my shares in the market tomorrow, most likely. Um, the margin efficiency is so good on these. I'm basically using this as my dry powder to collateralize my cash secured puts in Wolf and Cypher. So I'm basically double dipping with that same collateral. I have to keep this cash on hand to fund the cash secured puts. So I might as well be getting paid 11% annually on the cash instead of it being a melting ice cube. Um, I am considering a weird thing like tomorrow. It's too late to have to earn the dividend, which means I could short stretch tomorrow and in my other accounts, not this account because I need this. It wouldn't really work to fund cash secured puts. It would, well, maybe it would. No, I really wouldn't need it to fund cash secured puts. I would need it to fund buying actual shares. So I have to think about that. I don't think I have enough cash in this position in this account to really do that. But in the main account, I may actually, I may actually short stretch and pay the borrow cost, and then take that position off like right before I would have to pay that dividend. Actually, it probably wouldn't even matter. I could probably just leave it on, but why would I do that? All right. Just rolled this one up. Let's close that. So this has been on for 20 days. It should be ready to roll. It's worth half of what I sold it for. But again, Cypher was the one that had really shitty liquidity at 45 DTE. It's not the best. It's not the worst either. So I'd be rolling 2 weeks and only getting 9 cents. That doesn't make any sense. So let's roll up to the 16. All right. Let's see. What did I get filled at? I got filled at 150. So that works. Same thing here. I sold these for 260. They're only worth 85. So I'll probably just end up rolling to the same strikes here. No fail. There we go. It should fail. No? No fail? There we go. All right, so I captured a little bit more premium. Let's... Oops, not that one. This one. So my maintenance excess is 570. So I should be able to get 5 more shares of stretch. You're welcome, sailor. Pay me my monies. All right. Why do I still have maintenance excess of 320? Can I buy 3 more? Oh, because I'm getting margin credit for that. And god damn it, not that one. This one. So technically, I can buy 3 more shares. Forgot about that. So, okay. So if my math is correct, I should get about 64 bucks paid for stretch tomorrow. Maybe a little less, 60 bucks. Well, I won't get paid for 2 weeks, but you know what I mean. Hmm. This is half of what I sold it for as well. I might as well just roll them all the way out to the same. Less for me to keep track of. And I can collect a little bit of a credit here too. Oh, good lord. All right. Less bullshit for me to keep track of. And that gave me good. Not enough to get anything else. All right, sweet. We are done there. This account, 2,300 in collateral, so I only have $18 of buying power, which is enough to buy this back. I sold it for 42. I only got to buy it back for 5. So let's close this. Unfortunately, that means that I do not have enough buying power to roll this up to the whatever 11.50 for a credit, or $12 strike for a credit. So I have to find something else to trade, or else I could take these positions off. So let's take a look at this one. This one might be a good idea, what I was talking about earlier. So this is trading for 12.30. It's a 10.5 strike. It's in the money. In order to calculate the extrinsic value, I have to subtract out the intrinsic value. The intrinsic value is the difference between these two prices. So 12.30 minus 10.50 is $2 minus 20 cents, so $1.80. So there's $1.98 of of total value. Subtract out the $1.80, it gets 18 cents. So there's 18 cents of extrinsic time value that I can collect if I don't close this early or don't roll it. 18 cents over 3.5 trading days is like 6 cents a day, maybe 5 cents a day, which is actually not terrible. That would prorate out to about $20 for a week, which is still 2% of the 2% of the original underlying price, but more like 1.5% of the current price. So that's not terrible. So I literally could just do nothing with this and wait for this last 18 cents to evaporate out of here. But I have collected 37 of the 55 cents pretty quickly. See if there's anything else I can do with $10 or $10 a share. Basically $1,000. It ain't Cypher because that's trading at 18. These two positions I trade with my brother-in-law, so we will leave those alone. Still a little bit of extrinsic value in there. I think BitDeer might be in the range to, no, it's $12 as well. I used to use a screener, but I didn't like any of the ones that I found. Used to have a crypto category here. Colorado banking and 24-hour market. That's annoying. All right, so Bitcoin mining stocks between $5 and $10 per share. Might not be much of anything. MIGI. Oh, Mara? Fuck you. That's a shitcoin. Oh, CLSK is still... CLSK is still in that range? I didn't think so. Might have to add HUT to my will not trade. Okay, so that's pretty close. It's not bad. BTBT and Hive. Let's try those. Why? Why was that in dark mode? And these are in fucking light mode. Oh god, BTBT is super cheap. I'll look at it, but there's no way in hell. There's enough premium to sweet. Yeah, let's fuck this. No. Oh, and Hive was 240. Yeah, this is too cheap. There's nothing here. So CLSK or bust. Let's see if there's anything else I can do. Oh, I've got 6 shares of Stretch. So if I hold these, I'll get paid $5. But if I sell them to take a new position, then I can earn way more than that, even in just the rest of this trading week. So, what did I just get rid of? I sold a put in something. Can't remember what it was. Oh, was it Strive? All right, so CLSK. Sell the 11, that gives me $26. Strive, sell the put. I can get 22 at 11.50, or I can get 42 at 12. Those 2% returns for a little over half a trading week. This is 3.5% returns in that same time frame. So I need an extra $200. Is that right? Yeah, to sell the 12, I need 200 more bucks. So let's, I know this is, I'm throwing away the dividends, but the whole point of this is dry powder. So I'm gonna, for me. So sell 2, and I wonder if I can sell these at what I'm gonna fill that. Let's see. I'm just selling a market order, I think, here. So I actually got paid the 100 and what would be funny is if I sold it at 100 and I filled my other positions on Tasty Trade where I was trying to buy them. That would be hilarious. All right. So that should give me the 200 bucks I need. Let's see if that kicked in. Yeah. So now I have 2,500 in options collateral. I've got 25.55 in cash, which means that I have $55 in actual buying power. So that worked out well. I got my 4 shares of stretch. I can collect my $4. What was it? BITD? Interesting. I never really traded this one before, I don't think. Actually, that's 4% returns for the rest of the week. I mean, there's no volume and open interest, so the liquidity might suck on this. There's a tons of bids, so the market makers are willing to fill this position. 10-cent wide spread is not the worst, but it is concerning that there's no volume. But I will have to keep this in mind. Bitdeer. Let's see, strategy. Yeah, still not breaking even on this. I have a Tesla position. Yeah, I'm still probably going to be way upside down on this bad boy too. Yeah, down about 50%. All right. I think that's it. Let's check the chats and call it. Nope, I think we're all caught up.